Welcome to Fintech Chatter News, presented by Tier 1 People, leaders in fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Well, welcome back, Carolyn. Great to see you join my good friend James at Scalare Partners.
I didn't know you knew James.
Of course I know James. Yeah, James, I've known him for about 5 or 6 years. I know you're a really great human being.
Yes.
But yeah, first of all, congratulations. I was really chuffed to see you there. Can you tell us, I know you did a little bit of an intro at the beginning of the show, but can you tell us a bit more about what you do, some of the ventures that you're involved in, and kind of what makes you different? Because I've had so many chats with James over the years about, VC and what can be done better, and kind of what Australia needs and the nuances of Australia and what might work here and what might not.
Yeah. Oh, well, I'm very fortunate to have landed there. The guys are fantastic. So Nick, Giles and James are the founding partners. And I've had the pleasure of knowing them for about 9 months. So I jumped in to help support some of the startups if they needed that kind of scaling and commercialization mentorship, and got to know the business pretty well. So I was pretty chuffed when they asked if I would come on to the business. But they're relatively young. So they're only about 4 years old. And currently there are 22 and a handful being announced soon of startups within the portfolio, and predominantly tech. So they're a tech advisory and investment firm. But they go in very early. So they're usually seed round. They usually write the first or second check, and they work very closely with those organisations to help them scale and grow. So they've got a great community of non-executive directors, they've got advisors, they've got scaling programs, we do masterclasses, we do sprint runs with the startups to help them grow, and we stick with them right throughout their journey, which is fantastic. And I think what the guys identified very early on is there's a lot of firms out there that are very focused on the very early kind of pre-revenue MVP almost type stages. So think of your start mate boot camps and things like that. And then you've got your traditional VCs like your Airtrees who come in at a Series A or sometimes a B and can write much bigger checks. And there was this real gap in the middle when you try to raise between 250 and 500k for that seed round to really get moving, and you've got a very lean team, so you need access to almost like a virtual CFO or a virtual marketing team or a virtual technology team, and you really need that advice. That's where we come in and benefit. So we've got all of those services there, so that you can leverage us instead of having to invest in that. And then we sit with you all the way, and we have an executive director on the board to help you with the governance piece, and we help stick with you and scale you through.
I think what's really kind of worth noting as well, I'm good mates with Ryan at Cape, and kind of have seen kind of through the friendships with him and with James just how well that whole dynamic works. And if I look at Frankie One as another great example, I think the distinction I would make is that the people that you're investing in are proven, super. They've been there, seen
They're
it, done
superhumans.
it.
No, they really are. We have we've got Kate, we've got Frankie One, Master Remit, Stadio. There's a bunch in kind of fintech and Web3 that would be really familiar to this audience, and then there's a lot of kind of tech and edutech and agri-tech and things outside of that. But we look for companies that are generating revenue, that are getting traction and ready to scale, that are living their life's work. It's not their side hustle, but they're wanting the help, they need the help, and they understand what we can deliver. And then the main ingredient is those founders and how amazing they are. And Ryan's a perfect example of that.
Now we've talked a lot about fundraising today, and so obviously the dynamic shifted, the market shifted. What was really interesting was when you talk about data mesh. I actually interviewed Mark for the podcast, maybe it was about 3 or 4 months ago, and we were just asking about, I asked him the question about fundraising in this environment. He gave a really fantastic answer, which I kind of cut out and edited and put as like a 5-minute little short, right? But what was really kind of great was to see that 3 months later, he's obviously taken his own advice and announced a raise at a time where very few have been able to do that. What tips have you got for founders out there who do need to go and raise in this type of environment?
Yeah, I think, Chris from Zepto used to say this, and it rings true across everything that I'm reviewing at the moment, which is the 1% of the 1%.
Yeah.
And I think people have to be really realistic about their valuations. I still find that's a bit of a hurdle. I think there are founders out there who are still maybe expecting too high multipliers for what they're delivering. This hasn't changed because of the macro environment. This is always the Scalare approach, but it needs to be a sophisticated and level multiplier of the actual revenue that is happening. It's not, a 10, 15, 25, sometimes 35x multiplier on your revenue. You need to be realistic about where you're at.
Yeah.
And if you're looking for really high money and you don't have a clear path to the return or how to spend that, and that would be over time, then that rings an alarm bell as well. So, if you're a company generating 150k annual rolling revenue, you've valued yourself at 15 mil and you want 3 mil, that's not good maths.
Yeah.
And so, it's understanding where you sit, what the market is. I think I also like to really hear when founders share who they believe their competitors are. What could go wrong?
Yeah.
Tell me all the stuff that could go wrong.
Yeah.
Because that helps me understand if I'm the right partner for you, if I can help you overcome the things that could go wrong, and I see you have a clear understanding of your market, your customer, your competitors. That's a fantastic place to start as well. They're the kinds of things, but you'll be surprised how many people come to the table and don't have a clear understanding of that revenue piece, how it correlates with their valuation or what they believe they're valued at, how they're going to spend that money, and that scalable commercialization model, and what could go wrong.
Yeah. Sadly, I'm not surprised.
Yeah. But we're here to help. We're happy to have the chat. She's not always going to hear what you want.
It's crazy, right? I had somebody approach last week who, I've tried to raise, but I can't do it myself because I don't have any savings. I've never worked before, and I've got an idea. It's like,
just an idea.
Yes. But look, I think this is the kind of issue, right? It's the reality check that's kind of happening. And say reality check. What's really interesting is just, to me, a great example, right? Like one of the most prudent founders I think I've ever met.
And
every investor dollar is on, got maximum benefit, and extracted every bit of value out of every cent that has gone into that business. And we were talking and we're like, when did that change? Like, when did that actually change and the game changed? And the reality is the game didn't change. We've just, too much hubris has entered the market. And I think in Australia, particularly the size of the market, that is, it's kind of fatalistic behavior, right? Yeah.
Well, I think as well is just because of the international kind of market in the US, Australian founders and startups have always had to punch well above their weight anyway, right? They've always had to do more with a lot less. This time is no different. And so, the right founders, you can see them making those hard decisions quickly with empathy and care. It's not the first time that we've had to do, these types of things because of where we sit in that global landscape and our global counterparts. And I think the other, encouraging thing that I talk to the startups about when I speak to them is, if there are international competitors in this market, like we've seen a lot in fintech, particularly with open data, you see a lot of people pulling out of the market. If you can almost be the Stephen Bradbury, of your vertical. If you spend, get tight, spend less, do more with less, stay agile, create a great customer experience, don't lose your head or lose sight of who you are, by default you will acquire customers because other companies are pulling out of this market or shutting down, and those who spent more based on their future growth rate as opposed to what they should have been spending. And so we will see a lot of consolidation, and not just in the fintech market, and we'll actually see clients moving home, and that's a huge opportunity for Australian startups.
I've always said to my kids, your dad's not where he is because of talent. I just outlast everybody else.
Just a Stephen Bradbury.
Stephen Bradbury, and I'm really happy with that tag, right? And I think it's a really good point that you make. Also, I wanted to ask you, because you do see a lot of trends. We've talked a lot about some of the redundancies that have happened, and whilst it's always an unfortunate experience, sometimes what it does is it gives somebody the catalyst to go, hey, I'm going to go and I'm going to chase that dream now.
Yeah.
Probably not a bad time to be doing that. What are some of the trends that you're seeing that you know, if you were to do it, you'd go, right, that's the problem I'm going to pick?
Yeah. It's funny because I'm seeing different trends, like trends at a micro level and at a macro level. So I'll give you an example. With all of the redundancies, I would not be exaggerating if I said of my ex-colleagues and friends and things that have been made redundant, 80% of them have probably decided to go and do something on their own or to become a consultant or contractor for what they do for a role. And I think COVID has taught us that you can have that kind of freedom, the remote piece is there. I think people are getting more concerned because of the changes in the market around diversifying their income.
Yeah.
And what I'm finding is startups, because of how lean the industry has become, and just tech in generally, instead of paying someone for a full-time role, they're looking for people for 2-3 days a week to fill a gap. And they know that they're capable of doing that work. And so I'm seeing a huge trend in that.
Yeah.
And I did, a little bit of, contracting stuff and whatever over Christmas before I started with Scalare. And I can tell you, and you probably know this better than me, it's the first time I've never had just one full-time job.
Yeah.
And managing my inboxes and managing my invoices and just staying on top of stuff was just an absolute nightmare. So if you think about the gig economy and you think about this big shift to consulting, a couple of days here, a few hours there, whatever, there's got to be some innovation in that for actually managing the back end of that and managing yourself. And so that's one area that's really interesting to me. The other is I still think that we started to scratch the surface around open data and the payment piece, and because of slow to launch products in the market and things, I think a lot of people have abandoned ship, or they've had to pivot and focus on other areas. But I feel like that'll come back with a vengeance. I feel like it's having a bit of a lull at the moment, but there's still huge opportunities, and I can see a lot of trends in the market around the shift from, and again, I think this is COVID driven and a sign of the market that we're in, but the cost of retaining a customer and the focus on that versus the cost of acquiring a customer.
Yeah.
So I've seen some really fantastic tech pitches in the last few weeks where they're helping industry verticals, like a bank, for example, better retain a customer and stop them kind of shopping around rather than having them leave. And so that focus on consumer experience and retention, I think, has been heightened.
Yeah.
And again, it might feed back to that Stephen Bradbury piece. If you can retain your customers, create a good experience and pick up new customers on the way by being the last woman or man standing, then that's the way to win at the moment. Yeah,
absolutely. Well, Carolyn, it's been great to see you again. Thanks for joining me. Where can people find out more about Scalare?
Yeah, so on our website, scalarepartners.com, and feel free just to hit me up on LinkedIn as always. Always happy for a chat. I drink coffee and Pinot Noir.
Awesome. And as always, you can connect with me on LinkedIn and Twitter. Thanks for joining us. If you're coming back, thanks so much for your support. And if you're new to the show, make sure you give us a follow. And if you're watching us on YouTube, give us a like and subscribe. Until the next show, keep safe.